Good morning, everybody. Welcome to another day of Marketplace brought to you by Mike Bjork. Today is Tuesday, November 17th. Hey, we got a few economic news for this to go over, so we're going to jump right into it for you guys. We're going to start with some inflation news with the CPI, which is also known as the Consumer Price Index for the month of October. So as you can see, back in September, it went up 0.2%. Forecast is supposed to maintain another 0.2%, and it actually dropped. Now, if you strip out the food and energy, we get the core, and a lot of times we look more at the core because the volatility creates too much fluctuations. It doesn't give us a true meaning, so we look more at the core. And we had as you can see, it went across the board, went up 0.2%. So on that side, it's actually a good number. We're actually year over year at 1.9% on the CPI. So if the Fed is looking at inflation at the CPI level, it would be in the range of where they would look to raise rates. PCE is a different one. That's kind of gives you a little bit more trending of where things are at with the inflation. So that's why they like the PCE a little bit more than the CPI for their inflation numbers, because if something gets more expensive, people trend to go a different direction and stuff like that. So it's a little bit more accurate in terms of where the inflation would be. So they look more at the PCE, but this is still an important gauge as to kind of gives us an idea which direction inflation is moving. Let's move on. We'll start with the industrial production here. As we can see, not so good. We had a negative 0.2 back in September, and it continued another negative 0.2 in October, with the forecast showing a little bit of improvement, but it didn't. We've been seeing manufacturing not so good lately. As we saw yesterday, we had the New York index, Empire State Index, coming in as a bad number as well. Capacity utilization, basically no change there at 77.7. And then we got the home builders index. This is a confidence level for home builders, which is important, kind of gives us an idea as to which direction they think the housing market will go. And that one pulled back from October reading of 65 all the way down to 62 when they were forecast about 64. So we'll have to kind of watch and see. It is November, so of course they're going to pull back a little bit. As obviously they're not doing construction and building homes in the winter time. So we'll have to kind of see if this continues as a trend. Today the stock market's up. It's after a big rally yesterday. It's continuing it today. We do have a few Fed members speaking later today, so that could create a little volatility depending on what they say and if there's any surprises in the words. Also keep in mind tomorrow we got the FOMC minutes being released, which will be about 11 o'clock Pacific Standard Time, and they're going to be. So tomorrow I would expect the market to be a little quieter in the morning until we get that reading out, and then they'll probably go from there as to which direction they're going to go, depending on if there's any surprise in the minutes or not. Bond market, we're not as fortunate as the stock market. It's usually they go it's like a seesaw. One's better and one's worse. So today we're down on the bond market, which is down about approximately 12 basis points, which basically leads us to a little higher pricing for our interest rates. So rates are up a little bit this morning as a result of it. All right, folks, thanks so much for watching. I hope you guys have a wonderful day, and we'll look forward to seeing you guys tomorrow. Take care. Bye-bye.